Thanks for tuning in to the Big Money Investor Show with Jim Ingersoll, where we talk about the best strategies for you to create cash flow and long-term wealth. Investing like the very top investors. Visit us online at www.bigmoneyinvestor.com and enjoy today's show.
Welcome to the Investor Success Podcast. I am Jim Ingersoll, and I'm excited to have you along today. We created this show exclusively for investors seeking lasting cash flow, more net worth, and really success investing in real estate the right way. And that's really the topic of the whole show today. My name is Jim Ingersoll, and I'm your host. I want you to join me in Tampa, Florida for our private lending boot camp in September. You can get all the details and information on our website at www.investortrainingsummit.com. I created this podcast to motivate and help inspire you to invest in real estate the right way so you can enjoy the benefits of the cash flow and the increased net worth that your assets are going to provide for you. And our special guest today is going to help us do just that. I first worked with our special guest a couple years ago when I wanted to be certain that our documentation was absolutely point on and perfect with our bank elimination blueprint members. And I had the pleasure of working with Jillian Sidoti on our joint venture agreement, the investor qualification docs, and all the disclosures. But let me tell you a little bit about Jillian first, and then we'll dig right into today's topic. Jillian is a securities attorney, and she specializes in transactional legal matters such as all the fun stuff like private placement memorandums, Form 10s, Reg Ds, trademarks, copyrights, all that good stuff. She also spends a considerable amount of time speaking around all over the country at various real estate investing seminars and note summits and all kinds of things. She loves teaching people how to legally raise capital for their real estate investment projects, and that's our topic today. Before her legal career, Jillian also had a cool business where she owned and operated a record label, which enabled her to tour worldwide with a whole bunch of awesome artists, and that included South Africa, Canada, Europe, and the U.S. What's really neat about Jillian, too, is she's got the legal side and the finance side, and she also spends some time teaching finance and accounting and different things, drawing on her experience as a controller and CFO as well. So she's got both sides of this spectrum covered completely. And while I'm thinking about it, you can check out all of Julian's information at crowdfundinglawyers.net. Jillian, it is so nice to have you on the show today. How are you doing?
I'm doing great. Thank you so much for having me. I really appreciate it.
It's awesome. Did I leave anything out there on the introduction, or was that okay?
No, that was perfect. That was perfect.
Good. I just finished reading your book, The Crowdfunding Myth, which everybody should pick up a copy on Amazon, by the way. How was the book writing experience for you?
You know, it was really good, and if anybody out there is ever thinking about writing a book, the number one thing I can say is hire a coach. I hired a coach not so much to help me write the book because my coach actually knew nothing about my topic. It was more about putting a fire under my butt to get me to do it every day, because that's the thing, like if I hadn't had that coach telling me that I had to get it done in a month, then I don't think it would, I think to this day it still wouldn't be done. So it was a great experience. It was like being back in college and having a term paper due.
I think that's
the pressure
awesome.
was enormous. Yeah,
the pressure was big. Yeah, you had to meet your deadlines. That's awesome.
Yeah.
I've written 2 books, and I've been working on a 3rd book, and I can't get back to finish it. My first one was really hard to write. It took a long time. My second one, I buzzed through really fast. And my 3rd one, I've got too many real estate deals. I can't get back to finishing it up.
I know. That was the thing for me, too. You know what was funny, though? The month that I wrote it was one of the best months ever in my law firm. So you can't let work stop you from reaching your goals. You can't be blinded by work. That's what I realized. So it was funny because I get the whole real estate deal. So what I did was if you've ever read this book, there's this great book out there called Miracle Morning. Oh, you and I have talked about this before.
Yes, I love that book. Great book.
Yeah, so Miracle Morning, that will get you finishing. You just do your writing in the morning with your scribing part. That's what I did.
That was a great book. I agree with you. That was an excellent book. I really enjoyed it very much. Okay.
Yeah.
Well, let's talk a little bit about this security stuff, because a lot of investors don't really understand what a security is and how it relates back to real estate investing. I really love investing in real estate, and a great way to do it is with other people's money, but you've got to manage that process correctly, right?
Absolutely. Yeah, oh, absolutely.
So tell us a little bit about what a security is and why real estate investors need to know what a security is.
Well, that's a great first question, because if you don't have that foundation, the rest of it all falls apart. You start running around like a chicken with your head cut off, not understanding exactly what's going on. So if any of you out there are who are listening are confused and don't understand, I don't even know why this applies to me, here's why. The test you want to go through is very simple, very straightforward, and here's what it is. If you answer yes to all of these questions, securities laws specifically apply to you. The first question is there an investment of money? Is your investor investing money? And so 9 times out of 10, the resounding answer is yes, they're investing money. Not their credit, not their time, they're investing money. So they invest money. Number 2, is the investor expecting a return on their investment? And this can come in many forms. It can come in interest, like on a note, or it can come in profit sharing, or something, a preferred return, something like that, as long as it's a return on the investment. Number 3 is the investor, is there more than one investor? And this is where people who are looking for private lenders often get tripped up. They think that if they only have one investor per deal, these laws don't apply. Like they say, oh, well, I only have one investor on this deal. No, the rule applies to, do you have more than one investor, period, for your business? It doesn't matter if they're segregated out by deals. The SEC does not discriminate, and the state securities boards don't see it that way. If you have more than one investor, period, they deem you under these rules. And fourth and finally, is it through the efforts, it's called through the efforts of a promoter, which basically means, are you doing all the work? You're not asking your investors for their capital and then saying, hey, come pick up a hammer and start rehabbing this house with me. That's not what's happening. So if you answer yes to all of those questions, investment of money with the expectation of profits in a common enterprise through the efforts of a promoter, if you say yes to all 4 of those, then the rules we're about to talk about are going to apply.
And that's a great way to start this whole call. I think that was really, really well done. And it's like the process flow chart you helped us with at Bank Elimination Blueprint. It's really well done there. Very
Thanks.
good. Okay, so if you're out there and you're using private lenders and raising private capital for your real estate deals, there's a good chance that what you're really doing is offering a security. And that's just the way it is. Now, what about all these, and this goes back to the topic of your book, the crowdfunding myth, but what about all these crowdfunding sites? How do they work, and do they make sense for real estate? And what's the whole myth that you're debunking with all of this crowdfunding stuff?
Yeah, well, that's a great question, because there's a bunch of different myths. The first myth is that all crowdfunding portals are created equal, or they're all doing the same thing, and they're not. There's a huge difference between GoFundMe versus Kickstarter versus like ground floor passive land Fundrise, which are all equity-based crowdfunding platforms. So what's the difference with GoFundMe? GoFundMe, for all intents and purposes, and if this offends anybody, I don't care. It's internet begging. It's internet begging. There's no security. There's nobody expecting a return on investment. There's nothing there. It's just internet begging. And then
I like that. But people use that for raising money for like medical and other things as well, right?
Oh, absolutely. Yeah. So most people just use it. I mean, I've seen some ridiculous things on GoFundMe as a personal policy, I don't donate to GoFundMe, to anybody on GoFundMe. If I have a friend who's truly in need, I'll just PayPal them some cash, but I'm not GoFunding anybody.
So in GoFundMe is not a securities violation because you're basically donating money to somebody with no expectation of a return, right?
Correct, right. And how GoFundMe started getting used to coin the term crowdfunding is baffling to me. But that's number one. So number two is Kickstarter and Indiegogo. You know, these are two websites where people have their businesses and they have their products and they say, you know, if you want to invest in my product or project or service, then I'm going to give you that product, project, or service at a discounted rate for being part of my quote-unquote Kickstarter campaign. And those aren't securities because there's no return on investment. You're not giving money and then expecting the money back along with return. You're getting the product, project, or service. So that's why Kickstarter
you're basically buying something. If you invest in those, are you basically buying something, right?
That's exactly correct. So then we move on to the other crowdfunding portals, and they all of them run a little differently. It depends on the crowdfunding portal, but they're offering notes on property, or perhaps they're offering equity on property, whatever it might be. Different portals run different ways. For example, Fundrise has two big $50 million funds that you can invest in, whereas Patch of Land has individual properties you can invest in, and those are usually secured by a note or a deed of trust. And so all of these crowdfunding portals right now operate in two different ways. They have a mini IPO, which is what Fundrise does. They're open. They're completely open to the public. Anybody can invest on Fundrise.com. Or they use what's called 506C as in Charlie, which is only open to accredited investors, and that's how something like Patch of Land works. An accredited investor is somebody who makes $200,000 a year or $300,000 a year as a married couple, or has a net worth of $1 million. So those are kind of how they're all working right now.
Excellent. I appreciate your covering what an accredited investor is, because I get that question a lot as well. So that was very, very well done. So does crowdfunding make sense for some individual real estate investors at some point? Certainly not the GoFundMe, and probably not the Indiegogo type, but if you wanted to be passive, you could go to Fundrise.com. Do these portals make sense at all for real estate investors?
I personally, so here's the thing. I'm a really, really, really bad active real estate investor. I will just admit it right now. And the reason why I'm really bad is because I'm distracted by a lot of things. So, for example, I personally own a bunch of property in Ohio, and I wish I didn't, because I have to be responsible for that property, and I'm just not I have a property manager on the ground there, but, he asks me to make the decision, and it's absolutely difficult for me to do. I just don't have time for it. I'm running a law firm. I have 3 kids. I've got a lot going on.
You're speaking all over the country.
I just don't have time. And for those of you who are listening to this, that probably sounds incredibly foreign to you and very strange, but it's just there are people out there like me who do better being a passive investor. And so I do invest in some of these crowdfunding portals, and I'll tell you which ones I do invest on. I've invested in both of the REITs on Fundrise.com. I also am an investor in 2 of their portfolio projects. One is a fund of 7 assets in Brooklyn, New York, and another one is a fund in, I think, Washington State. And then I also I have a couple of notes, or not notes, but investments in ground floor projects, which are, individual single-family projects that individual real estate entrepreneurs are using my money to rehab a project and then sell it on the market. So those are the two crowdfunding platforms that I'm invested in on right now. There's another one, Pure Realty, that I've looked at projects on there that look very interesting, and another one called CrowdStreet that also has some really good projects. Those are kind of my favorites. So there you go. But let's talk about it from the borrower's perspective. Should you crowdfund your deal on one of these sites? I'm going to tell you, you're going to pay a lot of money. You're going to pay a lot of money to crowdfund it on one of these sites. For example, I'm making a blended rate of 13.8% off of ground floor right now. What's that say? That means that the borrower is spending a lot of money to get my money because they have to pay me and they have to pay the crowdfunding platform, and I'm getting 13.8%. So how much is that borrower really paying? So to use a crowdfunding platform, you're going to pay for it for sure, but if you need the money quickly and you don't have time to go out and get it for yourself, then it might make sense to pay for that service. If you have the resources to get your own private money, then I always say start there before you start going to the crowdfunding platform.
Okay, fantastic. And I think those are great options for people that want to go passive. And ultimately, all of us people that are really active in real estate investing want to end up passive. So being that you're there is a good thing in my mind, Jillian. If you can earn really strong, if you can earn a strong double-digit return and not do any work, I mean, that's the best of all worlds. There's nothing wrong with that.
I think so.
I think so for sure. I completely agree. I think it's awesome. One of the other things you help a lot of people with is creating funds. And can you talk a little bit about when that sort of makes sense? What are the right circumstances for that to make sense, and sort of how does that process work?
Well, here's the thing. I'm gonna say something that your audience might not like to hear, but I think it's always the right time to start a fund. And I'm gonna talk about this in the single family flip sense. Look, you're gonna want to do, if you do one deal, you're gonna do more. You're gonna want to do more than one deal. If this is your game and this is what you're doing, you're gonna be doing it for the long term. You're gonna be constantly looking for deals. And for me, when you're using private lenders individually on each deal, you're creating a hamster wheel for yourself. It's a great way to start out, get your feet wet, and get your investors through the door initially. But if you train, and I do believe we train our investors to believe one thing. If you train your investors to believe that they deserve, this note and deed of trust and they get to pick the property and all of this stuff, then you are going to train them to believe that they should always have that. And so it's going to be very difficult if you continue to have them do it that way. It's going to be very difficult to transition them from that model to a fund model. And I'm not saying that it's impossible. It's just going to be difficult. I've had many people who've transitioned their investors over. But here's why you want to have your investors in a fund, both for you and for them. First of all, if you tell your investors, look, give me your money, I'm going to keep it for 5 years, and I'm going to flip it over and over and over again into multiple properties. That way you get off your hamster wheel. You don't have to sell them the property every single time you go out and buy one. You just tell them what the types of properties you're going to buy, where you're going to buy them, or whatever your criteria might be, and then you go and do it without their permission, but with their money. And an investor at first might say, but I need to look at the property first. That's simply not true. They're not going to live in the property.
Right.
They're probably never even going to drive by it, depending on where it is.
Yeah, I think that's another myth. I agree.
Yeah.
Especially if you do it in the framework of a fund. I completely agree.
Exactly. And that's the other thing, too, is that they, an investor wants to be a good investor. So if you teach them that they need to know what the property is all about, they're going to think that they're not doing their job as a diligent investor if they don't start researching the property. If you set the tone of, look, just know that this is what I'm doing, this is how I'm doing it, and this is what I'm going to give you in return for that, that will become their normal, and that's what you want to teach them. And then the other thing is, too, think about it this way. It's better for your investor to be in a fund than on a single property, because if they're in a single property and that property fails, they fail. If they're in a fund and one property fails, they don't necessarily fail because they're not attached to that one particular property.
Right.
That fund
There's
might
more
have
than
it
one
at 5
door.
or 10.
Yeah.
Exactly. So that's why I always say it's always the right time to start a fund. You might not be ready for it, but, you know, I think you always want to have that end goal in mind. That is the goal, is to get a fund going and to get out of the private lender space.
Okay, cool. So let's talk about how somebody can transition, because there's a lot of fear. People are afraid because they think it's complicated.
Yeah.
They think there's
Right.
so much regulation, so much regulatory stuff from the government and things they got to keep track of, and all this systems and processes and expense. How does it work? If somebody comes to you and they want to consult with you to open a fund, what is the process, and how can you get some of our listeners past the fear of getting started?
Well, the first and foremost, the biggest thing is that if you do hire an attorney, and an attorney, there's a lot of resources out there that say they'll do your private placement memorandum for you, and they're not lawyers, and they'll of course do it for a lot cheaper, and you'll get exactly what you pay for.
Yeah, don't download a template off Google, that's for sure.
Please don't. It's so funny because we just hired a new attorney in our office on Friday, and she said, I have a client who wants me to review their private placement memorandum. And I said, there's two things to that. They either wrote it themselves or they had a non-attorney write it, because if they already had an attorney write it, they just have them review it. And she goes, I don't know, they didn't tell me. So it turns out, of course, it's a template from a service, and it's a mess. And I told her, I told you. I knew it. So you know, you will get what you pay for if you go to a non-attorney. I'm not saying you have to come to me necessarily, although I love your business, but do go to a securities attorney who knows what they're doing as opposed to a service. With that being said, any good securities attorney is not going to take your money if you're not ready. Like, I turn away a lot of business and a lot of money because I am not going to take money from people who are just simply not ready. So know that. So here's what it takes. What your attorney is going to provide for you is the proper disclosure document for your investors. Your investors, once they get these documents, they will be fully apprised of what they're getting into. And then your attorney, or in our case, we will be responsible for making sure that you're compliant with the government. All you have to do is tell us where your investors are from, and we take care of that for you. And so that's where you can have a little sense of ease, is that you have this professional, just like you have a professional management property manager, you have a professional on your side to help you with these securities laws. And that's number one. Number two is the cost. People always get worried about, like, is this going to cost me a lot of money? And it's going to cost you some money. It is an investment. You are investing money in order to raise more money, to make more money. But there's two things to that. One, once your investors start investing, you can get that money back. We always put a line item in there that allows for our client to get their money back for what they spend on the legal fees, number one. And number two, and I always tell people not to use this word because it's not a good word to use when it comes to securities. And that word is guarantee. You should never use the word guarantee when you're talking to your investors, but I will guarantee you. Yes. Don't ever use the word guarantee when talking to your investors. But I'm going to guarantee you that you will raise more money quicker and more effectively and cheaper using the proper documentation than you will without using the proper documentation. So the legal fees are well worth the expense. I have tons of anecdotal evidence to support this. So yes, you just got to jump in and know that if you have the well-honed business plan and the right attorney, you will be successful.
It's really no different than buying an investment property the first time. You think
Correct.
it's going to be,
absolutely.
stressful, and you think it's going to be, too expensive and all that stuff. But once you start buying investment properties, it can be like getting on crack cocaine almost, because you want to keep doing it.
Right.
So
believe it or not.
Go ahead.
Oh, go ahead. I'm sorry.
No, go ahead. I'm sorry. I don't want to interrupt you.
Oh, I was just going to say, believe it or not, we have one client who's done 38 offerings with us. That's 38 individual private placement memorandums. Yeah. So, I mean, it does happen where, you can, we literally have theirs down to a science now. It takes my partner, Jean, 2 hours to get their documents done, because they come in and they're all the same.
That's awesome.
So, yeah.
Can you give a ballpark range on how much it costs to set up a fund? I mean, is it? Yeah,
and it is a range. It can cost anywhere from $10,000 to $20,000 essentially. Okay. It really depends. There's two things that it's dependent on. Number one, how much money are you going to raise? And number two, under what law are we going to raise that money? And we kind of, we give a free 20-minute consultation, and in that consultation, we kind of hone in on that and talk about, hey, what's appropriate for you? What should you be doing? And I draw a lot on my experience of working with other real estate entrepreneurs and trying to guide that conversation of, here's how much money you should probably raise. Here's what you should probably offer your investors. And here's the rule we should probably use.
Okay, so if you're flipping houses or even buying rental properties or whatever, as a business, and you're trying to grow your business, and if you're like me and you hate using banks because they just get in the way and slow everything down and everything else, a $10,000 to $20,000 investment is really not very much, Jillian, is what I'm trying to say. It is an investment. But from that point, you're set, and you don't have to worry about getting a cease and desist, letter from the SEC or anybody else, because you're going to do it right. So I think it's a good investment. I think that's a worthwhile investment if you're going to grow your business.
I agree. And the other thing is, too, it's so funny you say that, because something I tell people often who say to me, well, I'm just going to keep doing it the way I'm doing it now. I haven't gotten caught. No one's going to catch me. I'm too small for them to care. To which I say, that's awesome. You can pay me more money later to get you out of trouble with the government than you would pay me now to do it right. Only very, very occasionally. And if it gets, and it's never my current clients who call me. It's always some random person who found me on the internet. So.
I hear you. How about the fear of the regulatory side of a fund? Is there concern there, or is it manageable once it's set up and you're starting to raise money?
No, see, that's the thing. Like, part of one thing we offer at our firm, and I know most law firms don't offer this, but for that reason alone, we offer 6 months of ongoing legal support at no additional charge. And the reason that is because I want you to call me and ask me questions without fear of how much it's going to cost you. So I'd much rather you call me and ask me than to risk doing something stupid and getting in trouble. If you do it right, if you have the proper paperwork and you file the Form Bs and you pay attention to what you're doing and you communicate, huge part of it is communicating with your investors. If they ask you a question, answer the question. If you do those things, then you won't have a problem.
Very well said. And people can get in contact with you at www.crowdfundinglawyers.net, correct?
Yes, that's right.
And your book, Crowdfunding Myth, is on Amazon. Hey, can I divert for a second and just read a quick segment from your book on confidence? Is that okay?
Sure. Yeah, absolutely.
All right, I gotta put my glasses on. I'm getting older. All right. Here's what it says, and I've never done this in a podcast before, but I really do like Jillian's book. It says, one thing real estate entrepreneurs lose sight of is their business acumen. It's through their business acumen that they create wealth, and investors' money alone will not create it. Why do you think hedge fund managers, mutual fund managers, and sport team managers make so much? It's their acumen and their confidence resulting in wealth that delivers the big paycheck. After all, it's not their money they're playing with, it's other people's money. think of yourself as a big hedge fund manager, and there is money everywhere. Your business acumen and opportunities are not. And I want you to be confident and continue to realize that cash is a fungible commodity. I like that segment. And, going back to the fun thing and raising money the right way, is that where you build that confidence?
You know what? The thing is it's self-talk all the time. I see people, once they start begging for money, that's when money goes out the window. It truly is. It's when, if somebody sees desperation, or if an investor smells desperation, they will walk away because that doesn't look good for them. And so, it's really understanding that you have the opportunity that, people are not going to leave their jobs to become real estate entrepreneurs. They're not willing to take that risk.
Right.
They're willing to write a check. So, and, I live in an area where the idea of investing passively in real estate or investing in real estate in general is just so foreign and just mind-blowing. If you buy something other than a mutual fund, it's kind of weird, right? So, there's a huge swath of money out there in towns and cities across America that is just sitting idle, passive, that's scared of the stock market, it's scared of everything, and you're offering them that opportunity to do whatever they're doing on that A&E television show or that TLC television show that they would never even dream of doing, and you're giving them that opportunity to live that dream without lifting a finger.
I love the way you said you're giving them the opportunity to live that dream. I thought that was awesome.
Everybody watches it. Those shows are so popular. Everybody watches them, wants to be on them, wants to be a part of them, but not everybody can. And you offer that opportunity so that they can be part of that dream without taking as much of the risk.
Okay, very good. All right, so going back to marketing and promoting a little bit, if you don't have a fund, what are some of the big mistakes that you see people creating securities violations with lately? Because since I've started hanging out with you, Jillian, like not in person because we haven't met in person, but since you've started like educating me on this stuff like 2 years ago, I'm more in tune with it than I used to be, and it's pretty prevalent out there. But I mean, I'm sure you feel the same way. It's like a roofer going through a neighborhood and spotting every bad roof. What are some of the bad things that you're seeing that people are doing, in case any of our listeners do some of these things and they don't know they're wrong? Like, what are some of the...
Well, the big thing is making a deal on one piece of paper. That's the one I'm seeing a lot of lately is that, I'm just going to give you this one piece of paper. It's like a small note, and then, I secured it with the deed of trust and mortgage, and we're all set. And doing that is not sufficient. And so the lack of sufficiency in the paperwork is probably the number one thing I see as a problem. So what's your obligation? How do you mitigate that? You got to tell your investor all the risks associated with investing. That's really the big thing, is telling the investor all the risks associated with investing. When you are using a note secured by a deed of trust or a mortgage on a property, there are some states that have what are called self-executing exemptions. For example, the state of Colorado is one of those states. But a lot of states do not have that exemption. For example, California, Washington State, they don't have that exemption. And therefore, you have to do other things besides just providing the risk factors and recording the deed of trust or mortgage. There's other steps you have to take, like filing a Form B or just other steps you need to take. So
disclosures.
I want you to be able to...
I think you helped us. Yeah. You helped us create some disclosures. I think that covered some of that.
I did.
It basically said we're going to rehab this property. You don't know what's really behind the walls or under the house, and there's a lot of risk and all that kind of thing. How about on like marketing? Because I mean, we've all seen ads on Facebook or Craigslist where they're guaranteeing a rate of return or that kind of thing. Is that a violation?
The second thing. Yeah, the second thing I was going to say is the way people, quote unquote, advertise their opportunity to invest. First of all, sometimes advertising the opportunity alone is a violation. Prior to crowdfunding, you couldn't advertise at all. Crowdfunding has made it so that the new crowdfunding laws have made it so that you can do some advertising, but not all advertising is allowed. And I don't want to, get too far into the weeds here, but just know that general solicitation is oftentimes not allowed if you're not doing all the proper things correctly. Number one. Number two, here's the big thing. And these 4 words are going to tip off a state securities regulator or the SEC very quickly, because they have algorithms that search for this kind of terminology. So if you're writing anything,
that's a good tip.
Yeah, if you're taking notes, here are the 4 phrases and words that you should never use: guaranteed, low risk, safe, and secure. Guaranteed, low risk, safe, and secure. Never use those words when out looking for investors. And for those of you that are thinking, but I offer my investors a personal guarantee, so can I say it's guaranteed? In terms of the SEC, they don't consider that a guarantee, number one. And number two, you don't need to offer anybody a personal guarantee. Stop doing that. Stop. Just stop.
I agree with
personal
you.
Guarantees.
A personal guarantee, that's like giving somebody a blank check that's already signed with no date on it.
Absolutely. Don't do it. Don't get into that habit. Again, these are things. Remember what I said about desperation. If you smell like desperation, people will run away, and it's the same thing with the personal guarantee. It reeks
personal
of
guarantees and points and all this stuff really only exist at banks. That's how I look at it.
Yeah, exactly.
Okay. Anything else you've seen out there that people are doing wrong? Or were those the two main ones?
Big things. Those are the 2 big things. I mean, we could sit here and talk all day about things that people do wrong, but if you can avoid doing those 2 things, so what do you have to, let's talk about the proactive things you can do.
Yeah.
One, make sure that you have the proper documentation so that an investor, when they come in and sign up and give you their money, they're fully informed as to what they're getting into. That's number one. And number 2, make sure that you exude confidence and don't put out advertising or general solicitation that's violative of the law or that reeks of desperation.
Mm-hmm. Be confident, not desperate. That's really well said. Okay. I mean, we've covered a lot. I feel good about what we've covered. Do you have anything else you'd like to add in for everybody? Of course, they can check you out, and I highly recommend they do at crowdfundinglawyers.net and pick up your crowdfunding myth book on Amazon. Do you have anything else?
I do want to encourage people to go to the website because there's nothing for sale on there, but there's tons of free articles and videos and all kinds of stuff like that. So if you want to learn more about this and you don't want to spend any money, go right there and they'll be there. And then if you want to get a free consultation, you can access my calendar right from the website and make yourself an appointment.
Awesome. Well, I think we debunked the myths of creating a fund, and we took care of the crowdfunding myths, and we defined what a security is. I mean, we covered a lot of ground really fast, Jillian. I think it was great.
Good. Oh, awesome. I'm glad.
Yes, I'm excited. So I don't recommend people lightly, but I've worked with Jillian for a few years, and I do highly recommend her. And like I said, if you're trying to grow your investing business and you want to do it without using banks, a great way to do it is by creating a fund. And that $10,000 to $15,000 investment, I mean, that'll create returns for you as you grow your business and do more volume and a lot more deals. So that's why I've got a new coaching business, Jillian, like coaching a mastermind, and it's focused on people trying to do more deals, do more flips, more bigger rental portfolios, more note investing. We also cover passive as well, but really, if you're going to crank up your volume, you need to do it the right way, and that's why I was really excited to get you on today. So thank you very much.
No, that's great. Oh, you're very welcome. Well, thank you so much for having me.
All right, that's it for this special episode of the Investor Success Podcast. Again, my name is Jim Ingersoll, and if you want to check out our Investor Success Mastermind, you can do it online at investorsuccessmastermind.com. If you have a follow-up question, you can email me, jim@investingnownetwork.com. Be sure to go back to Jillian's website. It's crowdfundinglawyers.net, and pick up her Crowdfunding Myth book on Amazon, because it is a great book. This stuff's worth taking the time to invest in your intellectual knowledge to understand it, and also help you grow your business at the same time. So thank you very much.
Thanks for joining us today. Be sure to share this podcast with your friends and social media contacts, and visit us online at www.bigmoneyinvestor.com.